You're listening to Indications by the Conference Board.
Welcome to the Conference Board's Indications podcast. Indications is a public podcast featuring our global roster of thought leaders. Topics range from economic growth and competitiveness to human capital, governance, sustainability, and beyond. Each episode is a serious conversation grounded in data and insights that will keep you ahead of the curve in a turbulent world. I'm here with my colleague Lynn Franco, Senior Director of Economic Indicators and Surveys at the Conference Board. Welcome, Lynn. It's always great to speak with you.
Great to be back, Dana.
So let's discuss the most recent consumer confidence survey. Well, surprise, surprise, consumer confidence actually ticked up in March. Tell us a little bit about that.
Yes, quite a surprise, but a little bit of a mixed bag. So we saw the index rise from 105.7 to 107.2 in March. However, it was really driven by the improvement in the present situation, which rose by 10 points. So it's at 153.0 right now, a very strong reading. And consumers are telling us not only that business conditions are good, but even more so, the employment conditions remain quite favorable. In fact, our jobs plentiful question here shows that 57.2% of consumers said that jobs were plentiful. That's the highest recorded figure that we've ever had, and we've been doing this since the late 60s. So this has really been supporting consumer confidence. Where we're seeing signs of weakness, on the other hand, is in expectations. So we've had another decline in the expectations index, and that's really being driven by both inflation, in particular prices at the gas pump, and by the war in Ukraine. So both of these are sort of casting a somewhat of a damper on expectations.
Well, let's first talk about the present condition and also the overall index ticking upward. What makes our survey different from others that are showing a weakening in consumer confidence?
Well, what's showing here is really the impact of the labor market. And our survey has two questions. One, which asks consumers to assess current employment conditions and sort of then what their expectations are for the labor market. So as the labor market goes, so does our consumer confidence survey. Others, however, may be more influenced by inflation, rising prices. And so right now we see sort of a big divergence as those surveys tend to be more negatively impacted by inflation.
Thanks, Lynn, because I'm sure a lot of people have questions about that. And that really helps us to understand why our survey is unique. So let's talk about the expectations index. In March, it dipped just below 80. And we know that on occasion, a number below 80 can signal a recession. So what should we think about this reading?
Well, I think we can look at it twofold. One is obviously there has been a trend of weakening expectations. But on the other hand, a lot of this has been sort of prompted by the spike that we've seen recently in gas prices and by the war in Ukraine. So this is sort of a bit of a shock impact that we're seeing on consumer confidence. And so I don't think at this point, it's a recession signal. And we would have to see, I think, prolonged periods where the index is below 80, as 1 month does not a trend make. So it could be that we see a little bit of leveling off next month. But again, inflation is one of the major drivers here. We know that's going to be a persistent issue for consumers in coming months, and also the war in Ukraine. And when you look at the present situation, we saw an improvement there. So if we were heading into a recession, you would sort of see both sub-indices begin to decline on a persistent basis.
That's really helpful. Thank you, Lynn. So let's talk about some more of the details within the report. So inflation expectations 1 year ahead reached I think it was 7.9%, which is the highest we've ever seen on record. Tell us about that.
Yes, in fact, we've been sort of seeing this, gradual increase in inflation expectations since the pandemic. And, given the situation in Ukraine, and in particular expectations that we're going to continue to face inflationary pressures, we're likely to potentially see this tick up a little bit further. On sort of the flip side of that, which is a little bit interesting, is that, buying plans they have softened a little bit. So it's probably a combination not only of increasing prices, but also interest rate hikes. We've seen mortgage rates really begin to creep upwards, and we're seeing a little bit of a leveling off in home purchasing intentions. So we might begin to see a little bit of softening in some of these more durable items as consumers might, postpone some of these big ticket purchases, kind of wait until there's a little more certainty about the future as opposed to the uncertainty that we're facing right now. So we could see a little bit of softening in the coming months.
Thanks, Lynn. We're going to pause here for a station break. We'll be back shortly.
As war rages in Ukraine, the Conference Board is closely monitoring the situation and producing timely and relevant content on a daily basis that will help the business community navigate this global geopolitical unrest. What will the impact be on oil prices, food prices, our supply chain, and what about cybersecurity? How will this conflict impact the way your organization does business around the world, and how will you communicate this crisis to customers and employees? We're gathering the very latest content on our website. Just head to conference-board.org and find trusted insights to help you and your team lead with confidence.
Welcome back to the Indications podcast. I'm here with my colleague, Lynn Franco, and we're discussing the March Consumer Confidence Survey. So, Lynn, you were just saying that inflation is a really big issue for many consumers. And certainly when we looked at the data in terms of people looking to buy cars and homes, those expectations came off a little bit. Again, do you think that's inflation or rising interest rates, or maybe a little bit of both?
I think it's a combination of both. And then you add to that mix a little bit of uncertainty, and consumers then tend to purchase, to put off some of these big ticket items really to get a little bit sort of more certainty. But I think we're going to begin to see, as interest rates continue to creep up, that it could at least dampen some of these durable sales for the remainder of the year.
Well, Lynn, you talked a lot about some of the factors that may be weighing a bit on confidence, including inflation, higher interest rates, and certainly the war in Ukraine and how that's influencing activity here in the U.S., especially through higher prices for gasoline, food, and even things that have computer chips in them, like cell phones. But what would be important drivers to help consumers to be more optimistic going forward?
Well, I think a resolution in terms of the geopolitical situations might be helpful. Also, I think, consumer confidence is going to go the way the labor market goes. So if we have a good report on Friday, I think that'll maybe help alleviate a little bit of the concern that consumers are expressing. However, I think, the inflation issue is going to be with us for a little while. So it just could be that this sort of tempers confidence for the coming months.
That's super important in terms of inflation weighing on confidence ahead. We're heading, at least in the US, we're heading into the spring and summertime and certainly the vacation season. And many services businesses are looking forward to reopening and seeing customers come back in after the pandemic. Do you think that the inflation will interfere with that?
It may. I think it might impact certain consumers more than others. So for some, on a tight budget, if more money is going to, towards dining in, towards gas, there's less discretionary money, less discretionary spending. But we have seen, at least, with some of the restrictions in the last surge of COVID dissipating, that there was sort of this, desire to go out and to spend on services and sort of move away from durables. So we'll see if that trend now continues as we approach the spring and summer months.
Well, I hope so. I'm really looking forward to going on vacation this year. Well, Lynn, thank you so much for such great insights. This has been Indications from the Conference Board. If you enjoyed this podcast, you may listen to additional The Conference Board offerings by going to www.conference-board.org/podcast, or find us wherever you listen to podcasts. Thanks again for listening.
You've been listening to a podcast from the Conference Board, your source of trusted insights for what's ahead. For For the latest insights to help guide your business through this time of geopolitical unrest, we have daily and relevant updates on our website at conference-board.org.